Okay, guys, let's go ahead and get into it. You guys give me an audio check, and we'll just get right into the charts. Live stream. Typically, I'm going to cover the subscriber stock picks. Try to keep your picks to one or two, just so we can get everybody's, so I can take a look and give everyone an opportunity. I don't know if I'm going to go for the full hour today. I've got a lot of stuff I got to do today, and so, but maybe 45 minutes or so. So we'll probably just get right into the charts. Let's see here. Just waiting for that audio check. Give me a thumbs up or let me know if the audio sounds good. Cool. All right. So let's take a look at where we ended the week, and we'll go ahead and wrap up. So here is this is NASDAQ futures. The big thing, I was looking at the hourly. Again, that sideways range that we've been in, if I roll out to about, it's right about there. That was kind of your former high right in there. We had several ticks of that. That one kind of got close. There's another one. So it's like that range. Closing on Friday, pretty much right there. All right, you can see that is that exact level. So definitely a key level. Broke down. It broke down. They stepped in the last like 20 minutes or so, I believe, or I guess the last couple hours. Let's look at the 15-minute. Yeah, so you can see they stepped in and then sold it back down, and it basically closed right at that level. All right, so that's a very key level. We're still battling with that level. So the market has virtually gone nowhere since about that, rolling all the way out since about May 31st. And I got a troll on here asking me how my puts are deep in the hole. I don't buy puts, guys. I don't trade options. All right, I go long or I sell short. All right, if you're not familiar with what short selling is, selling stock short, one, do some research before you actually engage in that kind of trading. But and then two, you're likely it's been a while since I've had to think about it, but you're probably going to need a margin account, okay? And you're going to need, I think it's a minimum of $25,000 for that margin account. I mean, at the end of the day, in order to do any kind of like real trading, you have to be classified as a pattern day trader according to the SEC, and you need to have a minimum in your account of $25,000, and that's, if you go below that limit, you'll get a pattern day trading call, not really a margin call, but it's a pattern day trading call where they'll pretty much like lock your account until you get back above that 25 grand minimum. So that's just the criteria for this style of trading. You might be able to sell short on. You might be able to get some accounts that don't require you to pattern day trade. You'll have a cash settlement account then, and that takes like 3 days every single trade. It's just really tricky. I mean, a margin account is really where I found is where it's at. So we're at that level there. So I don't have any losses on the shorts really. I mean, if I look at the daily, okay, if I roll back, and I want to just kind of highlight this. All right, here, this is the entire rally going back to pretty much all of the year. Okay, we were rallying, and then we hit this high right here. Now this wasn't really a divergent high. We first started to show negative divergence right here. Okay, that is your first area of negative divergence. And if you just started shorting on merely the negative divergence, not on anything else but the fact that, oh, this is a divergent high and it has a high probability of failing, which it did. Okay, if you shorted on this divergent high, you were profitable over the next few weeks by about 3.5%. But let's say you're waiting for the big move and you've been shorting each divergent high. You are down as of this what is this day? March 31st. You are down Oh, let me zoom in, make sure I got the right. Yeah, you are down about 7/10%. Okay, so over 6 weeks of price action, and you've lost 0.7%. There were times where you were up, there were times, but ultimately you've barely gone down if you've been shorting that divergent high. If you shorted this high right here, which was not a divergent high, there was no real reason to necessarily short on this spike right here. But if you shorted that divergent high, and let's say you just do it at the close, all right? Not even at the high of the day, but we'll just say you do it at the close, and you would be down about 3%. Well within a flexible trading strategy. I mean, guys, I don't preach a strategy that says like, okay, get short, we make money from the moment you enter. Okay, that's not how swing trading typically works. I'm trying to get everyone positioned based on what I see in the charts. But again, look, and if you've been a bull, you've basically been buying the dips, and yeah, that's been working. If you buy the dips, if you're able to catch the exact bottom, again, you wouldn't really know this was the bottom at the time. But a dip maybe would be like this would be a dip. You could buy that dip. If you bought that dip, you're up about, as of right now, 4.5% or so on that purchase price. So yeah, that's been working. But shorting at resistance has not really been not working, we'll say. It's just been going sideways. All right, guys. So I don't have any, my puts aren't expiring and things like that. So if you trade options, again, I try to give market direction. I don't try to give the timing. I'll give you guys my thoughts, but I'm not trading options, betting my own money based on knowing that, I got the time right. I don't have to get the time right. As long as I'm in the trade and there's no technical change and I'm just my money's just floating sideways, I don't have to get out of the trade, and I'm just waiting for the move to the downside. So I know when I do these videos day in and day out, people are saying, oh, he's been trying to short for 6 weeks, and yeah, maybe I have been trying to short for 6 weeks, but I haven't taken any losses really. Okay, if you've been buying options, sure, you've been taking losses. I'm not the guy to go to if you want option strategies. Okay. So that's that. So let's go ahead and look at some, let me just, cover this. And so there we are, right at that trend line. So I don't know where we're going to go next week. Do we bounce off of this and, head back up? Maybe I think that we're going to start to roll over. I've been thinking that for the last couple of weeks that, the top is likely in. It's been pretty resilient. Let's go to these FANG stocks and just see what's going on here. Amazon. All right, so the main thing I'm looking at is there's kind of two levels of resistance. One, that island reversal candle. So far, that's still held. All right, we traded into it right into the top right there on Thursday, but that's where it stopped short, closing back below. And so far, that has held as an island reversal candlestick. Friday, selling down. I had someone telling me on one of the comments last week that, hey, Amazon's about to break out above that island reversal candle. and my comment was, a breakout and about to break out are completely two different things in the market. Okay, when you have key levels, this is typically where you want to take positions, all right? I want to short at this resistance level, and that, yeah, it could break out, but I want to be as close to a level as I can for taking a position. I want to short at resistance, buy at support. So you are always by that nature, going to be close to breaking out, but it doesn't mean you actually do. So that is that. And then obviously Friday rejected. So we'll see if that holds. That's one level. And then obviously if I roll out, I have kind of this downtrend line. I'm not super confident on the downtrend line, only because I had to kind of undercut these candles right up here. So that's why I don't like it. But so far we have had a reaction right here on, so that's what I got. The downtrend line and this island reversal. And so I see that as kind of a major area of resistance. We start to break above that, it changes things, all right, in Amazon. Google did break out from the pattern that I had. So let me roll out. This is kind of a weekly pattern. We'll see how next week comes. Sometimes they can pop it above just for a week or so. But look, this is the resistance level I have on the weekly as I roll out. Lots of reactions. There's okay. And that is a breakout for sure or a break back above. So we'll watch that, okay? That is bullish, definitely in the short term. Whether that fails and they sell it back down next week, we have yet to see. But as of right now, I can't really knock it on that one. Apple is, again, we got this bearish rising wedge. Looks like I got this little minor support line right here. So I kind of marked that out. But this bearish rising wedge, and really for the last week and a half or so, we've kind of just gone nowhere. It's just kind of doing nothing. Not falling, not going down, not moving up. Just kind of stuck. So we'll watch that. The buyers here's the hourly. You can see we started to break down, and then the buyers started to step in, not able to fully recover it, but not definitive breakdown. I did point out to the private member group that, this could be a sell-off or a sell signal if we start to continue to sell down. But, with the buying coming in towards the end of the day, it doesn't look impulsive enough to me to say that that's a complete sell signal on Apple. So we will just continue to watch that one. Meta has been drifting lower since earnings. All right, you got the earnings pop, and it's been being sold into slowly. So that's something to watch. And then Microsoft's very similar. It's just drifting. All right, it's going up. It is going up. It's just not. There's no real intensity to the buying. I mean, you just see this float here. From this candle here, it's floated up another % over a period of, 3 weeks, 4 weeks. So it doesn't look like aggressive buying. It's not anything that I'd be really enthusiastic about. And then if I look at the daily, you can, that we're still diverging higher. So as long as this negative divergence remains, it's likely that, each little high, which is what this is, kind of a marginal high, 1% or so, is about to get sold into and, roll down. So that's what I'm expecting in Microsoft. We'll see how that, if that starts to play out. Look at the PPO starting to turn down. No crossover yet, but getting close. So we'll watch for that crossover. And that's Microsoft. Oh, Tesla. Yeah. Again, guys, Tesla is downtrending. All right. It's just continuing to trend lower. So I don't have a position on this one. It's not anything I'm looking to trade right now. Maybe if it can run up and make a new divergent high, I'd be interested in shorting it. But as of right now, it's just kind of in the middle of some ranges. There's a gap to fill, so I suspect you're probably going to go down and fill that gap. All right, so that's those. Let's go with the semiconductors, SOXX. All right, so this one, look, what's changed since I've been talking about this? I know I've been talking about it day in and day out, but I don't have much else to talk about. If there's no, change in the trade idea, I just kind of continue to give updates on it. And you can see here, there's your uptrend. All right, we broke trend, negative divergence is there, and we're just like flagging, consolidating, I don't know. Still looking for more prices to the downside, all right? And the divergence is a big divergence, so it tells me there's a lot more to go here on the downside. It just hasn't quite played out yet. We had to get through earnings and the Fed and all that stuff where they just use that to pump. Earnings oftentimes, I think 90% of the time, stocks beat earnings all the time. Like every single earnings season, 90% of the stocks beat earnings. That's not saying anything. All that really says is, oh, okay, they're beating earnings expectations. What are expectations? Stocks are gonna be in the trash. Oh, they're not in the trash. They're just in, about to get thrown in the trash. So, things are better. It's just a game, and a lot of the times you'll see earnings season is used to pump stocks or get these little spikes. It's really just spikes. But I'm looking for a continuation of the downtrend. And again, if you look at this trend here, there's several earnings seasons throughout there where you'd have maybe little spikes throughout, a week or two, but ultimately the trend was still down. What else do I see on this one? I don't see much else, really. NVIDIA, I think, because that's the major player in this one. Negative divergence, that nothing's changed on that. So, again, I continue to just point that out. Look at that negative divergence. Bearish rising wedge here. Break of the wedge. And basically just kind of a sideways drift. Slightly higher, okay? But nothing that's outside of where I don't feel comfortable being short, okay? Do I want to be long? Look, I want to be long, down when you have some bullish divergence, although I don't think I was. Pretty sure I wasn't. But when you have bullish divergence down here showing up and you're dipping down, making lower lows, that's when I want to be interested in getting long. Do I want to remain long after 150, from this low, 150% move up? Do I want to be adding new money long? No, not with the negative divergence in play. I want to be looking to short. Now, again, resistance 289.75-ish. I think that's about where I have it. And as I roll out, that's that former high. So I'm looking for that to hold, all right? If I see this start to, there it is. That's your former high right there. We start to break to the upside and start getting closes above that. That's going to change things from my perspective, all right? And so I have a downtrend right now. You can see lower highs and lower lows. And in the bigger trend pattern, we've rallied up and made an equal high right here, but it's still held. So we'll see if, I don't know what's going to happen. Looks like, I don't know, earnings is coming up 2 weeks from now, it looks like. So they might just hold this thing sideways into earnings. I don't know. And then I don't know what's going to happen after earnings, but I would say whether they pop it on earnings, I would expect shortly after earnings, this thing gets sold into. And I'd put a higher probability it sells down on earnings, but again, I don't know. Maybe they trade this thing down into the earnings, and then after earnings, they pop it up. The earnings game is a little, I don't really try to play the earnings game. But again, that divergence is massive, and it tells me we're going lower. So I'm watching for this price resistance to hold. That's NVIDIA. I know AMD was selling off. No, they rallied that one into resistance right there at about 99.90. That was the level I had marked out. And, there it is. Hit it to the T. Qualcomm's been selling off. I know that one's been selling off. See, there's Qualcomm. That's a big powerhouse semiconductor, and it's been going lower. So there's no real strength in the market in general. There's literally just a couple stocks that are rallying, and they're barely. They're not rallying super strong. Some of them, like Microsoft, just inching higher. Apple kind of inching higher to flat, basically. So I don't see that strength that everyone's so bullish about. Although, if the rest of the market decides to rally and catch up to the FANGs, then that could change things. But that's not been the case. So, all right, let's look net. I don't have an opinion on this one. It's really just kind of sideways. I don't really have any divergences. I don't have an opinion. I think sideways to down, could be dead money, could continue lower. Doesn't look like a long to me, I guess, if I had to guess. Obviously you rallied the last few days, but I suspect that gets sold into. Para. Let's see here. Para. Again, just another stock trending lower. You're not going to see just a 5 stocks rally and hold the market up and everything be fine if the rest of the market's going to, sell off. And this one's continuing lower. No divergence, so I don't see any indication that it's done selling off. I don't know where the bottom is in this thing either. You got the pre-COVID lows. That could be you'd probably get a reaction there, I would think. Right, let's see here. Tesla, covered that one. The dollar, let's look at the dollar. Yeah, so the dollar's had that bullish divergence for a while, and this, again, is one of the reasons why I haven't been as covering the gold stocks as much. Bullish divergence, and and then also, if the dollar rallies, that should be bearish for the market and tech and stuff. That bullish divergence has been building, all right? So these are divergent lows. This is kind of interesting. Okay, this was a trend line. It's a potential trend line. Let me see if I can extend this out. Not really. So I have it kind of marked as that. I've got, a couple data points, but there's a possible breakout. I don't like this as a trend line because I only have 2 data points. I've got one there and one there. So, but the dollar's catching a bid, so we'll see if that continues. And then you'd want to look at interest rates, TNX. Now this one, if I go to the weekly, this is basically COVID there. Oh, not the text. This is COVID, and I've got, sorry guys, please. I've got this uptrend line in interest rates, and yeah, kind of breaking down, but again, that's not a sell signal. That's, that's too close, and it looks like they're buying it. So I suspect interest rates are going to continue to rise, and we're going to make another high in this trend. And if that happens, tech's going to sell off. It's very, very, very likely. So that's where I'm at on that one. I think interest rates are likely going to keep rising. And then again, if you guys haven't seen, here's the long-term bear market in interest rates, which was a long-term bull market in treasury bonds. This goes back to 1981. This is one of the reasons why, just in general, I am, bearish for sure, longer term, and just in a larger trend, because this larger trend in interest rates has been broken. Okay, so 1981, you've got interest rates continuing to fall. That means that stimulus over 50 years for a real estate and for the stock market. And then here in 2008, these undercuts are Fed manipulation. This is QE1. This is QE2, Operation Twist. And this is COVID. Each time, this is the Fed in there messing things up against the natural order of things. I mean, these dips right here, since 1981, the Fed was cutting rates, but they weren't doing the QE. It was just kind of a natural flow of the rates, cut rates, and okay. Here is where they cut rates to 0 and it wasn't enough, and they were doing liquidity stuff. So that's what, each one of those is. And then COVID, obviously they went crazy, and then boom, just rates have been broken. This trend, long-term trend, has been broken. All right. So now the trend is up. All right. We could backtest. That is a possibility. Maybe it comes in for a backtest. But I don't know. Right now I'm going off this trend line. Rising interest rates likely going to continue for many years. This isn't just an 18-month. The difference that the media will tell you is like, oh, most bear markets are 18 months. Okay, they're probably cherry picking their time frame, but yeah, over the last 15 years, every time you've had a bear market, 50 years really, every time you've had a bear market, the Fed's come in with cutting rates on average about 5%. And then the QE. So yeah, that cuts bear markets short when you got the Fed in there But now you've got inflation, you've got a broken trend. So I don't think that this is an 18-month bear market. I think we are trending higher for many years in interest rates. Not going to go straight up, but will work its way higher, probably over the next decade or so. All right, so that's that. PayPal. That one got bombed out. I know that. See, look at that. I mean, that's a sell signal on the weekly. I'm on the weekly chart here. If I take you, if I can, the weekly lows are right down in here. Okay. And there's a sell signal. So breakdown, that's a breakdown. Look at that, look at that weekly. It's kind of a zone of support, and there's a big breakdown. So that tells me now PayPal is heading down to this consolidation zone. Okay. So that's what I would be looking for. Here, this to me looks like an area of probably support. 43-ish. I suspect that might be a good buy zone down there. But yeah, it looks like it's going lower. And that's drop of about 30% more to the downside. This thing from the highs has dropped 80%. So doesn't look good to me. And on the daily, you don't even really have bullish divergence. I mean, this looks like it's heading lower. So keep an eye on that one. But FSLR, I know they had some pump report thing about buying some company. I haven't been trading this. I mean, that's dangerous. That is definitely dangerous. That's brutal. I mean, the thing is that I didn't short this. I'm thankful I didn't. But you had this uptrend line here, and I talked about you had this breakdown right here. It was on earnings. I didn't want to chase shorting this thing after earnings. It was down like 20% or something. At the lows about 15%. It did recover a little bit, but it still was not objective to short. And I don't want to just enter a short halfway. I don't want to chase a position. So I did talk about, okay, if it runs up and back tests like there, you could short. And they did gap it up right to there. So I'm sure there were a few people that maybe took a short there, and that would be objective. But as it started to run, you'd have to stop out and just get, you just would have to stop out. And it ran pretty hard. So, yes. So for me, I'm not in it. I don't see anything on this one right now. It's back into this channel too, so. All right, so MDT, that's that medical one I talked about a while back. Looks like it's starting, and it looks like it's uptrending, to be honest. I don't have any divergences. I had the bullish divergence back here. Bullish falling wedge. All right, and boom, breakout, back test, higher high. All right, you're making higher highs. You're probably going to make a higher low now. And as far as I can tell, it looks like it's uptrending. So I would be more interested in buying the dips on this one. Support looks like it's about... It's kind of tricky to tell. It's either, there's a couple levels I can see that could be support. Right in here, about 86-ish, 87 down to 86-ish look to be the support level. And then you also have this trend line, which this trend line is probably a decent support, something like that. You could come in and hit that trend line, and that would be a good area, of support as well. So, all right, let's see here, Vale. Netflix, that one's still holding bullish trend. I looked at it on Friday. I can remember. Okay, there's the bullish trend that I have. All right, still holding it. It is diverging. All right, you have negative divergence. It's very similar to like the triple Qs and the other tech stocks. You're diverging. See the RSI starting to turn down. Just that, although we haven't made a new high yet, so I guess that's not confirming a new divergence. But it has been diverging. Or hold on, let me just double check. Yeah, on the PPO, that's a divergent high. On the RSI, not so much. And I don't really have divergence on the RSI. Kind of mixed signals on that one. That was a divergent high on the PPO, and you did get that correction. Still holding that trend. So I'm not interested until I get a sell signal, which would be a break of that trend. URI, that one's been selling off. Here's United Rentals. Again, break of trend and sell signal was back here on the March 10th or whatever. And it's trending lower. So now, not anything I'd want to be shorting, obviously. You know, from the sell signal, it's down, what, 20, 25% or so, 24%. Not anything I'd want to be shorting at this point, you know, but does look like it's probably topped out. I think it's going a lot lower, guys. But I'd want to be I'd want to short into resistance. So this one's, to me, is sell the rip. When I say that, that means, okay, we're now in a downtrend, and as it rallies, you want to sell into it. Rallies, you sell into it. Rallies, you sell into it. That's what's been making money, selling the rip. All right, so. McDonald's. I already covered Microsoft. We'll look at McDonald's. So this was the trend line. Let me look at the hourly. Yeah, so that was the trend line that I could make. They tried to hold it, started to get choppy. That is what you see a lot of the time when you start breaking. It'll get really choppy and gapped up. But that's a break of trend. Not super impulsive. We do have the negative divergence on the daily. I suspect it will continue to resolve to the downside, but this could float for a little bit. Maybe you pop up and you kind of make a new divergent high and could do that. I think the upside's limited. I'm not going to short it. It's not my favorite for shorting, but that's what I have on that one. Disney and Lyft. Disney, yeah, bad earnings. It's in a downtrend, guys. So look, here's your bear market. All right, that's kind of your downtrend. I did overcut or had to draw the trend line right through those data points. So not my favorite trend line, but lower highs. All right, there's a lower high. Oops. There's a lower high right there, and likely going to go make lower lows. So I suspect we're going down to take out the low, and you've got big support that's been in place right down in this area. Now they might undercut it, but you do have big support right down in there, about 87, 86.50. No guarantees that holds, but that to me looks like decent support. Lyft. Trending lower. Momentum's moving lower. Price is moving lower. What a horrible stock to have IPO'd and bought into. Here's your IPO back in 2019, and you've pretty much lost all your money. So I like the company. I use Lyft all the time, but the stock is, they just lose money. You're at some support. This is the trend line that I have, so you could get a bounce here. You're at support right now, so nothing I want to short. I don't want to short this thing. I want to short the ones that have rallied into resistance or broken, just recently broken support. I don't want to short something at support or have already sold down quite a bit. Okay, let me see here, guys. I'm just going to scan a couple. I already covered SOXX, so SOXS is the inverse ETF. If you're not able to short SOXX, then you can go long SOXS. Do your research on that, but you know. The problem with the inverse ones is they have decay because ultimately they buy options and futures to try to mimic the thing. And options and futures have to roll from contract to contract, and options expire. So if you're not trending, then the decay, those things will continue to lose. They'll continue to lose money. If you're trending, those things will actually outperform. But if you're not trending, then in which we're not trending quite yet. So. Well, sounds like the vacuum's coming. So I'm going to do one more and then I'm going to wrap up. Let me see here. I'm just going to scan around. Let's see here. Coin. People like coin. Okay, coin. We'll see. Coin. This is obviously Bitcoin, Coinbase. We can look at Bitcoin too. So, I mean, that's a divergent high right there. See the negative divergence? That's a divergent high. We only have one divergent high on that one, but it's there. So if I had to guess, I think it's going to roll over and continue to sell over. I don't see anything else. I mean, again, another horrible stock. Again, this is just the Bitcoin pump. I've been bearish for a while. I mean, obviously, I can kind of explain, but I started the channel back, I think it was 2019. I have to look at the chart because I can tell you on the SPY when so I started this channel back here in 2018 or 19 or something like that. That's when I started the channel. And I was bearish back then because the trend that I had, this is a weekly trend, so going all the way back to 2009, we had a nice, clean upward trend on the weekly. Support. Okay, nice. This is a bull market for sure. There's another reaction, and then we broke. All right, we broke trend back in 2019. Now, the Fed got involved back then. So in 2019, we had a little break, and during Christmas Eve or something, the Fed came out and did their little pivot, pumped the market back up. So, guys, I just, I can't just like stick my head in the ground and say the Fed will save us for always. That's just not a very logical way to do it. So, I have to go with what the charts tell me. We broke, then the Fed came in, they pumped us back up in 2019 into 2020. We hit resistance on that former trend line. And then COVID randomly mattered. COVID was already a thing, but it didn't matter until the technicals were there. When all of a sudden we hit major resistance, now everyone said, oh, COVID is an issue. So there's COVID. And then Fed came out again, pumped us back up. And then they were able to get us back into the trend line. But to achieve that, we now have massive inflation. And the inflation's coming down, but it's not going away, guys. It's just coming down from the spike high, but it's likely going to be a lot higher than really the Fed wants, and it's going to be an issue. I truly believe that for many years to come. And then boom, we broke again. All right, so now we're in a bear market. This is obviously a bear market, and I think that's going to continue. Okay, I think this bear market's going to continue, and ultimately we're heading lower. So that's why I've been bearish for a while. If you go back and look at some of my old videos, you know, I mean, obviously I've gotten some things wrong, but I've gotten some things right as well. You know, I mean, I was short for the COVID drop. You know, most people weren't. They didn't see it coming. I caught that short, all right? And I covered and took profit. That was a massive drop. I did not really have a large position for this big long move here. I had some, you know, we grabbed some here and there, but in general, didn't catch, you know, a lot of it. But I did catch this move. So, and obviously I think I caught that down move. And I've caught most of this bear market that we've been in as well. So in general, we're doing okay. Now, do we start a new bull market? You know, we'll see. I obviously won't be long right away, but if we're going to go, you know, if things change, then, you know, we can change our picture. But as of right now, I just don't see it. I don't see it in the chart. And going back to coin, it just goes to show that, you know, a lot of these things came public during like 2019, 2020, when the Fed was doing all their pumping money and cutting rates. And that's when these things come public, and they're kind of trash companies, basically. They're not profitable, and they come public during a mania. People buy it with all the excess liquidity. Doesn't mean the company's business model actually makes money. And then when you get it, when the Fed liquidity goes away, the reality of the business model that these things have manifests themselves in the stock price, and that's what you got. All right, so negative divergence, looks like lower prices on that one, guys. All right, so that is all I got, guys. So hopefully you're finding value. Drop me a thumbs up on your way out, and I will catch you guys next week. Take care.